Hey everybody, welcome to our YouTube channel. My name is Glenn Tompkins, and today I'm looking at a stock that's hot topic in the market today. It's Redbox, and it's got some news that could be generating some buzz and moving the stock higher. But is it sustainable? If you want to know what I found out, you sit right there. Hey everybody, Glenn Tompkins, Senior Instructor here at VectorVest. Love to have you here and love to bring these videos to your attention. If you're brand new to the channel, don't forget, hit the subscribe button, hit the bell icon so that you'll be alerted that when new videos like this come out, you'll know right away. Today is all about a stock called Redbox. It's a digital disc company where you can go to, you find them in a lot of your local stores. You go up to a kiosk, and they're inexpensive way to rent DVDs, all right? And if you don't bring it back right away, it's okay, but they're gonna charge you a fee, a late fee for bringing it back, and you just go back to the kiosk, you put it in, and it reorganizes it, blah, 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 blah. But a couple of things hit my radar. There's so many streaming platforms that you can access at home. How is Redbox even still in business? Well, I think a lot of it is when you go to a Redbox to rent, they're still cheap. They're cheaper than when you try to rent it on your streaming services. Not everything out there is free, right? I just rented a movie over the weekend called Unported. It was a $3.99 rental. Because it was just brand new to video, right? Or you can always buy also from your streaming services. So I'm like, do you really want to go out of your house to go to Redbox to go? And I'm like, I don't know. I really don't know. But let's go take a look at what I got going on. Let's go to my stories. Now, the company hadn't been really making money for a while. They've got negative earnings and negative earnings growth rates. So this is interesting. Redbox announces CFO transition. When you see that things are not working, you got to take action to make things better. And a transition could be a good setting to start to move from going down in earnings to going up in earnings, but it's going to take a while for that to happen before you actually see the move, all right? But I think that that's, noticing that there is a problem, going after the problem to see if you can make your company better. Now, my next story about this talks about the big move today. Redbox shares skyrocket 58% in early trading. So the first thing that comes to my mind is this a pump? Well, there's a couple of things that are going on here. Regardless of the venerable DVD kiosk vendor, it's transitioning its business focus away from the packaged media rental to digital distribution, including transactional video on demand and ad-supported streaming. You already know that this is a heavily marketed space. There's a lot of competition in this space. Does Redbox have the chops to keep up with the big streaming services that are already out there? The service lost $140 million in 2021, but generated more than $35 million in digital revenue. Separately, the company said that it gained access to an additional $50 million in credit. Now that is something to about. They just got an infusion of $50 million. Is it enough to sustain this move in a heavy competition space? All right, let's look at this. I'm thinking that if it's not a pump in the dump, could it be a short squeeze? Well, I went to Yahoo Finance, looked at all of their shares. Short float as of April 14th of 2022 is 11%. Anything over 10% could be a possible short squeeze. How does this compare to other companies that are definitely in short squeezes like GME? Holy smokes, GME's got a short float of 21%. So is it in the realm of short squeeze? Could be. Not as heavily short squeezed as AMC or GME. But now I'm looking at, is it a pump or dump? Is it a short squeeze? Well, I think the news behind it pushing it up with the CFO change, with the infusion of $50 million to help to grow the business that they're pivoting to, the digital business, maybe it's not a pump and a dump, but can they sustain it? Can they sustain it in a heavily, in a heavy market that's got a lot of competition? Do they have the chops to keep up? All right, next thing, let's go take a look at a graph. All right, I'm looking at a 3-month graph, and the reason why I'm not looking at it in VectorVest yet is because we just started tracking the stock. I wanted to see what the stock looked like prior to us just tracking it. The stock based at a price of about $2 finally started going up, and a big bump up today. But again, can they maintain that bump based on what we've talked about? All right, let's get into the VectorVest software. Let's go take a look at it there. Oops, hold on. There we go. I've only got 1 day's worth of data on it, but we've got the VectorVest tools to give us better information, right? Relative value, the stock's upside potential is horrendous. Relative safety, below 1. It's not a safe stock. And they've got negative earnings, and they grow it at a negative pace. So fundamentally, the stock is not good. With the news, could it be a short-term play? Absolutely, but be careful. Be careful, because does the stock really have the chops long-term to compete with the streaming services that are already in play? Can it still go up more today? Nice move today, but the fundamentals show that no. The technicals, relative timing, tells me the stock's in an uptrend right now. Volume is okay for intraday. It's been trading a lot above the average volume. So that's where it stands. So my opinion in this, in regards to the news behind it, short term, this may be a good technical play. Long term, I'm not sure that they have everything, the wherewithal to keep up with the streaming services that are already in play, even though they're pivoting from the kiosk to a digital format. I do like the CFO change to help make it better. I do like the pivot to help it make it better. But if you're going to look at this, I honestly think it should be more of a short-term momentum play, more so than a long-term play. So that's what I got on it. Folks, this video is over. And until the next time, see ya.